Hey there, budding traders. How's the week been so far? It's week 47, it's in the middle of the week, and what have you guys done with the market? Well, for us, it's been a hectic couple of weeks, mainly because of the multiple seminars that we've been running to educate people about this awesome prop trade opportunity that we are presenting. So we are happy to announce that our first batch of prop traders are going to get trained on the 29th of November, and you would look forward to seeing them perhaps in the market maybe by January, and they would be handling funds that have been allocated to them. Yes, they don't need their own funds, they're going to do it via a prop trading firm that we have a connection with. So let's get down to trading. How's your week been? What have you guys been up to? Well, at Harmonic Forex, we've had an excellent week. We put out a couple of signals to our private client group through our Facebook group, and then all those signals have really turned to gold. So once again, whatever you hear out there about Harmonics saying that maybe it's not the best way to trade, we have the track record to prove otherwise. And I'm really going to take you through this to show you exactly what happens. So as you can see over here, on the 16th of November, I put this into the HFX inner circle, which is where all our private clients are on Facebook. And we do this on a weekly basis, where we would put all the trades that we are looking to take based on our point system. And I'm going to open up this file for you so that you can take a look and see exactly what were the trades that we called. So the spreadsheet that you see here is what we provide to our clients on a weekly basis. And unfortunately, I have to black out some of this because this is where all the work happens. It's the 5 different criteria that we use for a particular trade, and based on that, a point is generated for that particular trade. And of course, the higher the number of points, the higher probability you would have for that trade to succeed. So let me just take you through very quickly as to what our first trade was. So the Aussie CAD is a trade that is happening at this point of time, but we have decided to cancel it because we see a bigger pattern at the lower side. So we're going to take the bigger pattern rather than the smaller pattern. But let's take a look at this. New Zealand dollar, we called it for a sell at the beginning of the week. It was a bad pattern. All the criteria lined up quite nicely, and we got a 9. A 9 would mean that out of a maximum of 10, this has 9 points, which means it is a very good trade. And of course, we tell our clients where exactly we are looking to draw the X from. So the X is at almost 0.8. So let's switch over to the charts and see what's happened. Okay. Okay, so let's go to the daily chart. And this was the harmonic pattern that we called up. As you can see, X is, well, yeah, it's slightly off, but it's around the area that we called it. I'm going to draw this pattern out for you. So you've got 2 Fibonacci's, one from the swing high to the swing low, and the other one from the swing low to point C. So this point is called X, A, B, C. And let me maybe switch this to an H4 so that you can see it better. So what our system told us was that we are looking to sell this market at the confluence zone, which was somewhere around here. And of course, your stop loss needs to go above here. So what happened? The market went up. It made a double top. It hit point X, which is completely fine. So you shouldn't worry too much about that. And it made that pattern that we were looking for, a double top, and then the market crashed down. So how many pips would you have up to now? Well, about 110, 111. So very nice move. We've already switched this to break even. In fact, I have moved my stops just above 79, so that in case the market decides to go the other way, I have some profits and it's well guarded. My eventual target is somewhere down here. No, a bit higher up. Yeah, it was somewhere on the structure here. So let me just show you how we take our targets. We just simply draw a Fibonacci from the lowest point to the highest point. Yep, and I'm looking for targets somewhere around here. So once again, a very nice trade using harmonics, very simple harmonics on the daily chart. You have to be patient, but of course this yielded a lot of pips. So let's take note of that. We have about 120 pips here. Okay, that's pretty small and in a very ugly looking color. Okay, so 120 pips on the Kiwi dollar short. So let's look at the next trade, which was Kiwi Swiss. So I'm not sure if you guys generally trade this, but it's a very profitable pair for us. So once again, this was exhibiting signs of a back pattern, and let's see what we marked here. Okay, X is at 76.40. So let's go over to our charts once again. Look at Kiwi Swiss. Okay, so this is what we saw. I'm going to fatten this up so that it's much easier to see. We essentially drew this pattern from here to here. This is your downward move, X, A, B, C. So let's try to find the confluence zone. Just bear with me for a while. Maybe let's drop down to H1 so that it looks much better on the eye. Alright, so the confluence zone that we were looking to sell was here at around 76.32 with a very tight stop loss. Now you guys might say, hey, this actually moved well above your point X, which is over here, and you could have gotten stopped out. Well, the difference between here and here is only about 14 pips, and based on the calculation that we give our clients, so we have a formula to figure out what our dynamic stop loss should be based on the daily average, which is something of course I can't share here, but essentially we did not get stopped out because our stop loss was somewhere around here. It was close, but it wasn't enough to stop us out. And as you can see, there was a bit of a dance here, and then this market fell. So assuming that you shorted somewhere around here and it fell all the way here, that's another 140 pips for you. Just purely doing harmonics, doing simple stuff. And guys, the best thing is that you don't even have to watch the screen. You just put these orders, you walk away, and one of two things can happen. It can hit your stop loss, which it didn't in this case. It just rolled over, and now you're up 140 pips. Looks good, right? And this is the beauty of Harmonics. Alright, my third example that has already made us some money is Euro Aussie. So once again, we called for a sell, and it was a back pattern, and you could see that we were looking to take this trade. Let's look at where X was, 1.444. Okay, so let's switch over to Euro Aussie. Right over here, and the trade we called was this. Let me clear this up. This was a back pattern, and in fact we put this out as a signal to our clients. Actually, it's completely free of charge. You guys can subscribe to that and you would have made some money off this as well. So we were looking to sell this at 1.441. And what's the reason for that? Well, perfect confluence. And what happens when you have perfect confluence at a level? The market comes down. Now, people may say, hey, you guys actually lost money on this, but it's not true because our rules are very simple. Once it hits target 1, which I'm going to show you now, we switch to break even. So as you can see, this market went all the way to the top. Let's go down to H1 so that you guys can see this very clearly. Okay, so it hits the confluence zone here, comes back all the way down, it hits target 1, and then it flies up. So our rule is that take some money here and switch the rest to break even. So even if it comes up and if it hits you, it's okay. You've made some money here and the rest of it is break even. Well, it's better than completely losing money or not trading at all. So I feel that this was a very good trade. So it's really important that you understand your rules of engagement, because if you kind of like say, hey, it's okay, it hit target one, let me not switch to break even, you could be in big trouble. So a very nice trade, 3 profitable trades here. This made us 70 pips. So if you can do the maths, it's going to be 120 plus 140, it's about 330 pips, and the week is just halfway done. So what I would like to say is that really Harmonics works. It's just that you need to understand the rules of engagement. If you try to trade without proper understanding, like for an example, if you try to take the trade again here once this move has completed, chances are that you would fail. So it's important to find someone that really understands Harmonics and really share it with you the correct way, so that you don't make these mistakes when you go out into the live market. Okay, so before we wrap up, I just wanted to share a little bit more about the Harmonic Forex course. So as I said, we are running this on the 29th of November. It's pretty much a full house, but if you are very keen, just drop us a note. We would be happy to talk to you, at least to try and fit you in this time round, or maybe our next intake. But I just wanted to share what exactly we do during this course. So as you can see, our offering is very comprehensive, because we believe in not only educating you, but after that partnering you throughout your journey. So how it works is like this. We would have a basic course for 8 hours where we will talk about everything that's new for a new person to fit into Forex. So everything around support, resistance, trend lines, how to read a pair, and so on and so forth. And then of course we'll get into the cool stuff, which is the Harmonic course, where we will teach you how to draw all these patterns, and exactly like what I've shown a while back, you'll learn how to do that on your own. But after that, everything is not over. You'll come back for hands-on sessions, and that'll happen 3 times and for 3 hours each, where you can come back with your questions. You'll get homework so that you're fully into understanding what you're doing. I showed you the signal spreadsheet, the one that we gave to our clients earlier this week. Of course, you won't get it with the black box. It's going to be fully open. You'll see the criteria. You'll be able to judge signals for yourself. And you would get the signal service in the future for about 6 months free of charge. And we will give you unlimited support for life. We are always here on Facebook to chat with you, to figure out if you have any issues. And I think the most important thing is that you'll have this prop trading deal, which means you guys can, once we certify you, you can go and get money to trade. And we've tied up with a prop firm. They are fronting all the money. All you have to do is be willing to learn, and of course apply that knowledge that you have to this deal itself, so that you would be able to trade with the money that this firm provides. And it is not a small amount. It is going to be starting off at a 5-figure level. And of course we have this money back guarantee. Yes, we are that crazy because we know that our system works so well that if you guys can prove to us that you would bust an account using Harmonics, we will give your money back. And unfortunately for you guys, that will never happen, because we've got the statistics to prove it. We know that our system is so successful that you will not go wrong. You will never burst an account if you just use Harmonics. Alright, so that's it for me this week. I'm hoping that we would be able to take a couple of other trades throughout the week. We will update our signals as time goes along. So with that, I'll wrap this session up. I hope you've learned a lot about Harmonics, that it is indeed a wonderful way to trade. And irrespective of what people say out there, saying that, you know, it's not a good method, I do believe that if you don't learn Harmonics properly, it might not be a good method. But for us, we know when to take profit. We know when to set to break even. We know where to draw our patterns from. And once you have that knowledge, Harmonics is really, really easy. So I hope this was really good for you. It was great presenting this out to you. And if you guys have any questions, do feel free to contact us. Until next week, take care and trade well.